Okay, so then you go in tech, right? You leave the buy side.
Yeah.
You go do corp dev at Waymo. Corp dev also a very popular exit for bankers, I would say. But I feel like usually people do like one or the other. Like they either choose the buy side route or they choose the corp dev route, and I feel like they're very different. But like, why the switch to corp dev at the time? And then a follow up question to that is like, there's plenty of companies you could have done corp dev for, right? And like when I switched from PE to tech, I didn't do corp dev, but I went in finance and strategy with Jason, and I feel like at the time, like one of the most important decisions was like picking the right company.
Yes.
Especially if you're gonna go work in tech, like it's all about picking the right company, right? Because you're gonna spend at least several years of your life there. And just like as an investor, you're investing your money into a stock, but like with this,
Your
you're also
career.
investing your time
Yes.
and your career, which is like even more valuable than your money. Because money, if you lose money, you can make it back, whatever. With your time and your career, like you don't get that back
Yeah.
if you make the wrong pick. So like walk us through that decision making process. Like, why did you pick Waymo, and then also like why Corp Dev?
Yeah. So this was a really hard transition for me because I loved the buy side and I loved the job I had in Chicago. I'd gotten promoted to managing director in 2018, in January when I was there, and I loved the people at JHL, loved the PM. Was so lucky to have the chance to work around that quality and talent.
Yeah,
It was this is where life starts to become a part of decision making, not just career. So my wife and
yeah.
I were expecting our first kid in 2018. She was due in August, and at the time my wife was finishing fellowship in allergy and immunology, and so she was entering the point where she would have to go find a job, and for doctors, like, there's a lot less turnover. It's not like she's going to change jobs every 2 to 3 years. So
Right.
where she established herself in private practice and then grows her career could be where she is long term. And we bought a condo in Chicago. We wanted to stay there. As we thought about it more, also, like, both of our families are in California. My sister ended up settling down in San Diego. One of my other sisters on the East Coast. And so we had this, I just remember so distinctly this conversation where we were talking about how we were expecting a kid. We wanted to be closer to my wife's parents. And we were like,
Mm,
maybe this is actually the right moment to go to California and just settle down career wise there. And we agreed that we would kind of test the market. And if one of us got a great job opportunity, then we would move. And so, of course, my wife, being very talented, got an offer almost immediately from like a really good private practice in San Francisco,
yeah.
which is a double-edged sword. On the one hand, it was great because all of a sudden we now had like a less risky path to coming back to California. But then it
Yeah.
put me in a position where I was like, okay, I need to go find a job there now. And again, very lucky that I had conversations with my PM about it. He was really supportive. He offered to be a reference, and he just didn't want to have a remote team. So he didn't want me to kind of work for him from California, even though I offered to do that.
Yeah.
And so he was very supportive of me recruiting to find something. This was probably the most stressful kind of transition I've ever had in my career because I was going away from the buy side. And I
Yeah.
interviewed at Citadel, I interviewed at Millennium, I interviewed at other public hedge funds, I interviewed in private equity, I interviewed in growth equity, I interviewed in venture. Like, I really wanted to stay on the buy side. And in the spring of 2018, it was not a great time to be interviewing and recruiting for jobs. And I wasn't a perfect fit for every one of those jobs.
What was happening back then?
So in the spring of 2018, job market for buy side was a little bit tighter. Like, there weren't a lot of
Mm,
kind of seats. And if you were in the public markets, this was when Thang and what's now the Magnificent Seven really started to take a disproportionate share of kind of the market returns, or alpha. And so
yeah.
you were basically an underperforming fund if you were not levered to like Apple, Microsoft, Google, Netflix, Amazon,
Yeah.
right? And then this was
Yeah.
like pre Tesla. I guess Tesla had started taking off at that point, but pre Nvidia. So there weren't a lot of seats. The ones that were available were very competitive. I remember, like, I interviewed for a role, a more senior guy I had overlapped with at TPG ended up getting that job, and I was like, you know what? If I'm going to lose that job, I fully understand and respect that that guy is way smarter than me, more experienced than me. So it's small community. But anyway, to answer your question, I realized a few months into the process that I needed to start thinking about maybe not having a buy side gig. And then the question was, what do you go do? And so I ended up getting on the phone with people in my network who had transitioned from finance to corporate. And I talked to anyone I could. So I talked to people I even talked to people who had never done finance. I was like, I'm going to send you my resume. You're a friend of mine. I trust you. Tell me what you think of the resume you just received. If I was trying to get a job at Facebook, right? And this is a woman that worked at Facebook. She's one of my wife's best friends. And she had been there since college. So she was like, first of all, Vishal, I have no idea what your resume is. Like, I have no idea what Morgan Stanley does. I assume that you were like a teller at a bank. I have no idea what TPG is. I have no idea what JHL is. Like, I don't understand any of this. Like, and I read all the words in here, and like half of them are finance words that I just don't like. And she was doing product at Facebook. So that was enlightening for me, because I was like, okay, if I want to get into corporate, I really need to acknowledge that I'm not interviewing with people who deeply understand the finance world, the buy side world, the way I do. I also talked to Jason Lee, and I talked to a friend of mine who worked at Google and then went to a hedge fund. I talked to a bunch of different people, and I basically like kind of asked them to interview me as a kind of a mock interview process to understand what angles they would come at me with. And then finally, I took the philosophy of I would only go work somewhere if I would invest in that company. So I took a very like hedge fundy, buy side approach to it. I was like, I think if I want to be part of an early high growth trajectory, like why didn't I just go work at Google after college and stay there forever, right? Or why didn't I go work at Amazon? Could I find the 2.0? And so I laid out a bunch of different things that we were looking at J. I kind of picked, and I was like, I'm not just going to pick sectors, I'm going to pick winners in sectors. So, who knows? With the benefit of hindsight, some of these were right, some of these were wrong, but I was like, fintech is really interesting. I'm going to go pursue a role at SoFi. Anthony Noto had just left Twitter and became the CEO at SoFi. There was a chief of staff role for him. I interviewed for that. So that was one. I was interested in autonomous vehicles. They were kind of making a ton of noise. GM and Ford and Google were all investing in that. And so I was like, I'm interested in autonomous vehicles. Maybe this is the 2.0 scaled opportunity, and Waymo I think is going to be the winner, so I want to go interview there. Over the top video, I dropped for a role at Roku. Unity in gaming, and then crypto was really interesting, so I interviewed at Coinbase, and I used kind of folks in my network, including a guy from TPG, to help me get an interview at Coinbase. And then what I learned from my friends in corporate was the most natural fit for my skill set was corp dev. I could try and get a job in finance, but even then, like, I had a buy side mind. I had experience doing acquisitions. The most natural kind of place for my resume to go is corp dev. And so I focused almost exclusively on corp dev roles, except for that chief of staff role for Anthony Noto. And so that was how I approached it. And I interviewed at Coinbase, interviewed at SoFi, interviewed at Waymo, and I just got really lucky that the woman at Waymo who was building out corp dev had a private equity background. She's an incredible career story. She's now the CFO at Ford Motor Company.
Wow.
And so she's an incredible mentor. But she had a private equity background. She kind of had an appreciation for my experience in public markets. And then unbeknownst to me, when I was interviewing at Waymo, they were also thinking about someone who could help them do external fundraising, because at the time Google was starting to spin out the other bets and make them more independent, and Waymo was kind of next in line for that. So when I interviewed with the CFO, interviewed with the head of legal, they were asking a lot of questions about capital markets and fundraising stuff that I was kind of like, I know how to talk about this, but that's not what I was expecting to spend time on. I thought I was going to do like software M&A here. And they were like, well, turns out we need you to do both. So I went to Waymo, spent 2.5 years there doing basically 50% of my time on fundraising, and led their Series A with my boss, and then half my time on software M&A.
So basically, the way you kind of went about it is, one, taking a buy-side investors approach to almost like picking investments that you would want to make as an investor. Like, these are companies I would want to put my own money into.
Yes.
If I could, which I think, like, I 1,000% agree with that. That was also how I kind of went about it when I was looking to pivot to tech, for, the reasons we already mentioned before. Like, you're investing not just your money, but your time, like your most valuable currency.
Yes.
Right? But then the other thing is really tapping into your network to just see kind of like, what opportunities other people knew about, and what interesting companies are out there, and then just kind of doing your due diligence on like the short list of companies that you came up with, and then just seeing which one works out, basically.
Yeah, that's right.
Like, anything that's on that list, you would have been happy to get the position at. But it's not The thing I want to call out is I think a lot of people, when they apply for jobs, they take this like spray and pray approach. It's like, oh, like these are all the jobs I see on LinkedIn. So like, let me go and like just apply. That's not like a really good way to go about it, in my opinion, right? It's like you should first come up with a list of companies that you find interesting or that you would bet on, and then see if there is like a position available at that company that would fit what you can offer.
Yes.
Right. And sometimes there will be, sometimes there won't be. And if there won't be, then, obviously you got to take them off your list, at least for now.
I
Right. Like
actually, I
that.
mean, on that point, I would say if you identify a company that you want to be a part of and that you would bet on and that you're willing to kind of focus your career and your time and attention on for the near term, the role should actually matter a little less.
Mm,
It's, this is such like an old man thing to say, I feel like, but when I was at Wharton, people were, the people who had graduated were like, don't worry about what classes you take, pick the best professors, just and
mm,
go learn from them whatever they're teaching, just go pick the best professors. And there's kind of an analogous approach to what you're saying. So much of your career and your success will be tied to the business that you work for. If I go and I do an incredible job at a company and the company fails or just totally winds down and goes bankrupt,
yes.
like when I go out and interview again, that's part of my reputation now, right? That's part of what people view me as, right? That's part of my brand. Like I would actually, I struggle a lot with this, when I coach people. Like I focused on corp dev because it was where I could transition from buy side to corporate the most effectively. But in reality, I think it's really powerful if you go into a company and you say, I am here because I want to work for this company. Here is my skill set. I've mapped it to this role that you have available, and here's where I think I could add. Here's where I think I have some deficiencies or things that don't totally fit that I believe I can learn from or learn into, grow into. And then it's also really powerful to say, I'm not just here because I want to be in AI. I'm here because I want to work at what I think is the category winner in AI, or I'm here because I think this is the best company in this category. So when I went to Waymo, I was like, I went out of my way to say, I'm not interviewing at GM. I'm not Cruise. I'm not interviewing at Argo. I'm not interviewing at
Mm.
Aurora. I'm not trying to get a job at Tesla. I'm only here because I'm betting on Waymo. And I think people appreciated that because it showed that I wasn't just like a spray and pray candidate, right? I had a point of view.
No, that is so true. I found out to be true in my own experience as well. Is when I pivoted to tech, obviously I joined Square. I really studied Square at the time, and I was like, what do I think about this business? And I was like, at the time, I think it was worth like $3 billion in private valuation. And I was like, I think this business is going to be worth way more. Honestly, regardless of whether I joined Square or not, it was going to do what it was going to do.
Yes.
Right. Like if it was going to become a huge company, it wasn't because I joined that it became this huge business. Right. And then I went to GitHub, same thing, like $750 million private valuation when I joined. Now, obviously got acquired by Microsoft for $7.5 billion, but like now it's worth way more than that.
Yeah.
Same thing. It was going to do whatever it was going to do. The product was so good. It wasn't like I was like this huge needle mover or whatever. Right? I like to say I contributed a little bit, but you know what I mean. And then I joined the company after GitHub, and that was called Enjoy Technology. And that company ended up going public through SPAC, but then went out of business. It was trying to do like a similar like DoorDash. Logistics model is actually extremely tough.
Really hard.
But they have some fundamental flaws in that business model that's different from DoorDash. That I kind of saw the writing on the wall when I was there because I'm in finance. I'm building the models. I'm looking at I'm like, this can't work, right? And so I kind of eventually left that to obviously do Wall Street Mastermind. But my point is like Enjoy was going to go out of business regardless of what I did there as well. And so coming back to your point though, even though it's not really fair, for better or for worse, like people do associate like the success or the failure of the company with your success or your failure.
That's
Like
right.
they give you too much credit when the company you work for was really successful, and they give you, they count it against you too much when it goes out of business, right? And so I always tell my students, like, especially the ones who are, thinking about going to tech, like sometimes people are like, I'm going to go join that like seed stage or series. It's like, yes, you could be like the fifth guy at the next Facebook or Amazon, but chances are 99.99% chance you're not going to be at the next Facebook or Amazon because that's like one in like whatever, a million companies, right?
Yeah, that's
And
right.
so even when I joined Square and when I joined GitHub, I personally felt like the sweet spot is both of these companies already have super strong product market fit. You knew that they could be the category winner in their space. And at that point, it's more about like scaling the business and it's like, kind of that growth equity phase, I want to call it, is like it's scaling the go to market. And that's also, by the way, like for people like us who are coming from a finance background, like they don't really need people like us when they're like C stage or Series A anyway. They kind of have more of a use for our skill set when they're in that growth phase and they're trying to scale. And like because they already have product market fit, it's been de-risked a good amount. But I'm not saying it's for sure going to be a home run. Obviously, and you're not going to make as much money as if you were like the 10th engineer at, Facebook, but you can still have pretty significant life-changing upside. If I had stayed at Square long enough or GitHub longer, like, I honestly left a lot of money on the table.
Yeah.
Right? So that's kind of like how I think about it. And again, and a lot of it is, I think that's the other thing about starting your career in banking and on the buy side is like you learn how to evaluate businesses from an investor's point of view.
Yes.
And think about their valuation. And that is just like a super valuable life skill, not just for like your personal investing in your stock portfolio or whatever, but also for like picking jobs and picking companies and who you want to bet your career on.
Yeah.
Right.
Yeah, that's right.
And I feel like that's something that people don't talk about.
I mean, there's also like, just I guess related to that, when I think about like learnings from the buy side that have helped me make decisions on transitions to corporate, like sector and industry matter a lot. Don't miss the forest from the trees. Like you could pick a winner in a category that's not trending in the right direction. It doesn't matter if it's the winner in that category. If the whole sector is declining or struggling or at risk of going away, then whether you're at the best
do you
company.
Want to go work in AI right now, or do you want to work for like a newspaper?
Exactly. Yeah, exactly. Yeah. And then the second thing is, it's hard to know for sure what the winners are going to be, who the winners are going to be, but you want to get to a place where you have a narrative or you have a thesis that you can test when you get there, right? Like I had a point of view on Waymo when I got there, and I was still in my mind as I was starting to work there, calibrating what my thesis was relative to, coming in. And that was really interesting for me because it does allow me to discern to an extent is this business still what I thought it was when I was excited about it, or are there things that I'm now seeing that make me more or less excited? And those businesses change all the time, change on a day-to-day basis. ServiceNow does too. So it's important to maintain that. Don't just like, I've made it, now I'm here, now I can just not think about it anymore. It's a constant thought process.
For sure.